The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We have the Dow Industrials right now down 30. You get the NASDAQ off 1. S&Ps are down 4. Gold's trading up 750. We have the copper market up 3 pennies at 217. You get light sweet crude off fractionally. Bonds, we have the 10-year note down 10 ticks. The 30-year bond is flat. Good old King Dollars up 145 ticks, trading at 98.51. We get oil numbers coming out in about 20 minutes, which no doubt is going to push this market one way or the other. And right now we got our man, Mr. Kevin Hinks from TD Ameritrade Thinkorswim. And don't forget, folks, no matter where you're listening in your car right now, if you're on the West Coast, 7 o'clock in the morning, remember, at 12 noon Eastern Time, what's that? That's it's only in 2 hours. At 9 o'clock your time, just go to TFNN.com right on your cell phone, hit Tiger TV, swim lessons every trading day, 12 to 1 Eastern Standard Time. Kevin Hinks, what's going on?
Good morning, guys. How's everything?
It's
How
going,
we hanging in there?
It's going great, man. I mean, you know, it was a heck of a day yesterday, man.
So, a couple of times, Tom, you and I have talked about on this show in the morning how it was an easy day, right, to buy the dip.
Yes.
To hang on when the numbers look good. Yesterday, I would call that a difficult day because you were getting a lot of cross-current messages, and the market just kept going. It powered through everything.
It did. It did. And, you know, folks, if you want to learn about the option market or you're in the option market, what you have to absolutely understand is that swim lessons, folks, and TD Ameritrade, the people that are teaching you are professional traders, okay? And it's a whole different ballgame, okay? So go, please listen to it. You know, yesterday, Kevin, and you know what's wild, man, about the option market is that, you know, you've been doing it for years. I've been doing it for years. And the show yesterday, man, I was so psyched when you were talking about the vertical spreads, right?
Sure.
Because I'm not kidding. Still to this day, now this is pretty sick, okay? But still to this day, sometimes when I mess around with them, right, it's whether, you know, I'm going to buy the one spread or sell the other, right?
Sure.
You explained that so well, man. And it's not that I didn't have it, but I don't have it intuitively. Do you know what I mean? Like I have most things.
Sure,
Do you know what I'm saying? And it was so cool. It was so cool, man. It really was.
There's a knee-jerk reaction, right? You're bullish. Got to buy a vertical.
Right.
And that's kind of a common mistake that people make. Not because it may be the right thing to do some of the time, but it's not always the highest probability.
Exactly.
On a directional play. So sometimes if you think the bullish thing to do with the most probability of making money is to sell the put vertical.
Right.
Bullish, not buy the call vertical.
No, listen, man.
It goes back to those probabilities.
It was so cool when you brought that up because I'm sitting in front of the screen and I'm, you know, as you guys are going through it, I'm playing with my own screen, just doing it. And when you said that, it's like, oh man, you know, you know how this goes. Another light bulb goes off.
Goes on.
Another light bulb. Exactly, man. You know.
Right.
So it's really.
We got a special show today. It's really celebrity hour because for the first time since I've been at TD Ameritrade,
yeah,
JJ Kinahan and I are going to share the studio.
Oh, that's awesome, man.
Oh yeah, he's coming in today to do the show. Just him and I. We're going to talk about volatility, VIX, the rule of 16, which I think is a fascinating subject when you talk about volatility and VIX.
Oh.
And, you know, JJ and I have known each other since the 80s, since we were both young traders on the floor.
Yep.
He's the one who dragged me out of my basement office to come back and start
I love it.
the Ameritrade. So I gave him the old cats in the cradle speech that we don't spend enough time together. So I got him to come in the studio today and spend some time with me.
That is so cool, man. Okay.
So we're going to have fun, yeah.
And
Two old crusty traders talking.
Yeah, well, you know what? And this is the best market for it, man. I mean, you know, because, and folks, you got to understand something. When Kevin goes back and talks about a long time ago, if I go back and talk about a long time ago, guess what? Now, those guys were on the floor, so they had the edge. I certainly didn't have the edge because I was still one of the first electronic traders out here, okay? The difference now is, let me tell you something, you just need the TD Ameritrade platform because everything is like penny wide. It's like insane.
That's right. That's right. And all the information that I used to pour over for hours and hours to get in 5 seconds on the TD Ameritrade platform.
I know. It's amazing, man. It really is. Right. And what they'll walk you through is not only strategies, folks, but on the platform, you can basically bring up and say, okay, I want to do this strategy. What does that mean? What is that going to do? And there's a timeline that you can bring it out to, which is just amazing, man. You know, it's just like
The Analyze tab. It's going to be one of those. Write all this stuff down. It's a good day to take notes.
Yeah.
If you're listening to the show today, because we're going to talk about a lot of interesting stuff.
And that's a beautiful thing. So don't forget, every trading day, 12 to 1 Eastern Standard Time. And if you haven't test drove the platform, folks, you know, on your cell phone, I know many of you go on your computer, okay, which totally makes sense. Do it on your cell phone. It will blow your mind how clear the HD is on the TV and how clear the charts are.
Right.
I mean, it was made for cell phones.
Right. And finally, Tom, from 11:30, so 12:30 Eastern Time till the end of the show at 1, John Hart, the head of Ameritrade Mobile, the head developer.
Oh, that's beautiful, man. Well, listen, man, we can't wait for the show. I really can't wait for the show now, man. You have a great day, safe day, and I look forward to speaking tomorrow morning.
Always a pleasure, Tom.
Okay, man. Have a great one. You stay right there, folks. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Tommy O'Brien, Tom O'Brien. We do appreciate you growling and prowling with us out here. And when I was just talking to Kevin, JJ and Kevin are going to be doing the show.
I was running around taking care of a few things, but
at
I was
noon.
listening.
That's going to be a good show.
I'm going to listen to that for sure.
No doubt. Volatility. You talk about volatility. So in our markets, it's not bad. Last night, Asia. Did you see Asia?
I saw, yeah.
Asia, folks, was up 3.7% to 4.2% across the board, man.
Yep.
Yeah.
I mean, we had a monster day yesterday.
Oh, we did.
So
we did.
Sure.
Huge.
Yes.
No doubt. Let's go to Jim in Oldsmar. Hey, Jim, what's going on?
Good morning, guys. How are you all?
Good morning.
We're doing good. How you doing?
Great. This morning I was looking at Max Linear. It's a semiconductor company, MXL, the stock symbol. I was about to buy it at $1.62, and right after that it run up 1.5%. I didn't buy it because I was worried about getting stuck in it. The volume's kind of low. I was just wondering what you think about that.
Is it MXL?
Yeah, Max Linear.
Oh, yeah, sure. Okay, it's trading at $16.98.
Right.
I have it up 28 cents. But is that correct? Yeah?
Yeah. Well, I've got $17 right now on it.
Yeah, I get 17, right.
Yeah, I started to buy it this morning I'd done a little bit of research on it. I started to buy it at $16.62.
I see.
And I didn't because the volume seems kind of weak, and I was afraid I'd get stuck in it if I bought it and I wouldn't be able to sell it or something. So
Yeah.
I just wondering what you guys thought about it.
Well, it looks like it looks like it wants to test the 1775. And the volume actually isn't that bad. I mean, it's not great, but yesterday you had 1.4 million shares. You're at 322 right now. So let me just bring this back a little bit further and see what it looks like. I wouldn't worry about that you didn't get it, and this is why. So if you're watching Tiger TV, what you're going to see is this. When we came down in February, that low there was $12.67. And you see the spike in volume? That's on the weekly. So we did 6.7 million shares. When at the high, November 6th, we did 11.5 million. Now watch this. This is where it gets subtle. It went for $17.40. Then it stayed up at there. I'm doing a weekly. It stayed up there for 5 weeks, right? And watch what it did. So the first week, 11.9 million. Second week, 4 million. Third week, 4 million. Fourth week, 3.2. Then 4.6. Then it started coming down at 3.9. Now, you can't expect equities or anything to continually go higher with volume because they have to build up cause, they have to do all the above. So when you look at this, to me, this is a consolidation. And the top of that consolidation, I don't think it's going to break out because it's going to need more cause. And the reason I don't think it's going to break out is that the consolidation was set up when it came down into that lower level with volume. So I would, you didn't get this trade, but maybe 6 weeks from now when it's back down at those lower levels, that would be the trade.
Okay.
Yeah.
That sounds good. I'm still new at this. I told you the other day when I called you, I'm kind of a novice. I'm trying to learn this stuff. I was using some Fibonacci retrace lines, and I'm getting the hang of that. So I'm learning.
Well, that's awesome, man. And let me bring one other aspect up, is particularly on this trade here. You can see that this already moved like from 13 to 16.90. And these are the ones, remember we had one yesterday in the middle? This is really dangerous money management-wise. If you were going in for the day, it's not dangerous, okay? Because you're talking still 20 or 30 cents. But if you had overnight, this is dangerous because you don't have your back against the wall anywhere. You know what I mean?
It just went up 30% in the month.
Yeah,
so that's
right.
You could have an easy pullback, just off that move.
And have nothing wrong with the stock.
Right.
So what you try to do, Jim, is what I try to do is when I'm setting a trade up, I try to either get as close to where I think the support would be at the bottom, or if I'm selling something, as close as to the top where I think that resistance would be. And you don't hear it as much anymore, I think, because people realize there's so many traders out there. You hear a million things. You can't buy bottoms and sell tops. Well, guess what? You can get pretty close to it because you see them and say, okay, that's where I want to take the shot. And what you do is you put the stop on the other side. And yes, you'll get stopped out 2 out of 3 times, because that drives me crazy too. Sure. But bottom line is that's what happens. You know what I mean?
Yeah.
Okay, brother.
Okay, I appreciate it. You guys do a great job. Thank you.
Well, we
Thanks,
appreciate
Jim.
you growling and prowling with us out here.
Okay, thank you.
Thanks,
Bye.
man.
Let's go to our man Tom in Plymouth. He made some money yesterday. Hey, what's going on?
Hi, Tom. How you doing?
We're doing great, man.
That's good. Hey, I was wondering if you could take a look at that LABU for me. And I know it's going to do a reverse split here soon. I'm wondering if I should just get out of it. It looks like it's up good again today, so.
Okay, so let's take a look at it. You get the LABU. LABU, folks, is the Direction 300% bull in the biotech, the S&P biotech. And remember something, that these compound on the way up, they get defensive on the way down, and they're daily investment vehicles. Now, you can come over to our website at TFNN, hit ETFs, and read those white papers, because they're dynamite white papers, as to how these move. And when you know how they move, Tom definitely knows how they move because he trades it a lot. In fact, we were, yesterday we had a call from another trader that loves trading these also. It was the same one. So I was watching this all day yesterday because it wanted to get into the swing point of 736. And sure enough, it had the volume yesterday. We did 8.9 million. You've already done 5.2 today.
Yeah.
I think you get action here, man. You're at 740. 736 is your swing. You got to take that out with volume. So that's saying that, your next stop up here, not stop, meaning where it can go is like $10, man. Let me go over to the IBB for a second. Yeah, see, the IBB's breaking topside, too. The IBB's at 268, 267 is the swing. It's done 667,000, and it has to break 2 million. We're talking about 10:25 in the morning, man. It looks to me like you got another day in this, man. And I know you trade them enough to understand, the daily investment vehicles, but I'd see how this thing shakes out by the end of the day, man.
Yeah, maybe I'll just move the stop up and hang on to it for the rest of the day here and see what happens.
That's the way to do it, man, because what happens is that when you get real trending markets, and sometimes I can make a mistake if things are going too fast. It's, okay, I got to get out. You know what I mean? Because you get some good bread. In a real trending market, folks, what you want to do is that you don't want to get out. You want to bring your stop as tight as possible. Nice. And if it just keeps going, it keeps going. Definitely. And then bring it up again and bring it up again. And Definitely. You make the market stop you out. Yeah. The way this is trading right now, it doesn't look like that this wants to go lower today, man. I mean, it's already up 10% today.
It's quite a little chart.
And look at intraday, I have it up, and that has monster volume, Tom.
Yeah.
Cooking, brother. Okay, man.
Tom. Take care.
Have a great one, man. Have a safe one. You stay right there, folks. Tommy and I are coming right back. Dow right now is down 55. Nasdaq's off 2. S&Ps are off 1. We're going to break back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks, and as we do each and every Wednesday at 10:30, oil numbers just come out,
Yep, you can see right there, right? Inventories rose 10.37 million barrels. We'll pull up what the estimate was.
Yes.
But this is the live chart, and that gives you an idea of basically everything you need to know right now, right?
Totally.
Yeah.
34.30. We just went 34.30 to 33.95. And folks, if you are trading oil, you're trading gold, come over to our website. Hit the Nadex exchange, bring that up, because you talk about defined risk. That is the way that you want to be placing those bets.
Yeah.
If you're gonna place a bet inside those two markets, let me tell you something.
And look at the spike. I mean, we had 50 cents down, and now we're back up 25 cents, almost off the low.
Totally. And I don't have a position on yet, and most times I do, but. I traded oil the last 2 days, and it was kind of like in no man's land.
Okay.
When I was talking with Andy yesterday, oil normally trades pretty smooth, even though it's volatile, and the spikes were just a little too much. I mean, I did all right. I made a couple dollars, literally only a couple dollars, okay?
Yeah.
But for the risk that I took inside some of those spikes, that I wasn't happy.
Sure.
I wasn't happy. Do you know what I mean? Now, I'm watching this now, kind of look at this and say, okay, I like the aspect of it basically pulling back. Why? Because...
Can you just go to the next screen?
No.
I was just trying to take a look at some of the actual news as you were talking about it.
Let's see. We'll pull up CLJ6. We'll get the news on. There we go. Because there's a couple of nice swing points that this thing can get into. And if it has light volume as it gets into it, well, guess what? Then... this, will continue to build cause to try to get up over those higher levels.
Sure. And so this is really with the median estimate, right? The median estimate was only 3.4 million barrels.
Okay.
And it was 10.3. So you have an extra 7 million barrels.
Wow. That's a lot.
Yeah.
That's a lot.
That's why the price is going down.
That's
for
a
sure.
lot. Yeah, no doubt. Now, if we take a look, I know we get traders out there that has the USO. And the USO, okay, so this is pretty cool. So this is down USO is down 17 ticks.
And is this a live chart or delayed?
This is a live chart.
Live. Okay.
That's why,
Because it's the equities which are live. You just have the oil futures is the only one.
It's 10 minutes late.
Yeah.
And now the one we bring up for Nadex, and that's what's so cool about the Nadex platform, folks.
I know.
You're not paying for the quotes.
It is.
Okay. That's
We always pull it up for the futures for the futures around news events.
Exactly.
Right? Whether it's oil, natural gas.
Right.
Same deal.
Huge.
For sure.
Huge.
And so look at it. It made it all the way down to 33.60.
Yeah.
It's quite a move.
33. Yeah. It's 70-cent move.
70-cent move.
That's $700 per contract.
70-cent move.
Yeah. So if we take a look at this, let's see. So it has the USO on this 10-minute bar. Let's see how many more minutes we got. Okay, so this is gonna be a big bar. So that's only 3 minutes into it. You get 2.4 million. You're going into 2.5 million. So the real question is going to be, does it come back down and retest that whole level? We'll find out. Let's see what it's doing to the marketplace, because the market itself, no doubt, has been trading off this oil contract, which is pretty wild.
For sure.
And the market, so you get the Dow down 77, S&Ps are off. Look at that. They're not moving the S&Ps, though.
Can you just pull up a chart of one of them just to see how they've actually
Yeah, so we'll pull up the S&Ps. I believe they're down like about $8 right now, but which is not a lot for... Yeah, so we're down $7. We're at 1970.
Now, just with the S&P E-mini future, is that a live chart or is that delayed?
That's live. That's live. Yeah,
okay. Just the commodity futures.
Yeah, and gold is live too.
Okay.
I just didn't want to pay for oil too.
No.
Every one of them.
Why, when you can just pull it up on Nadex, it's a great deal for free.
Right. And what happens, what's really sick, folks? What happens is that when a Bloomberg terminal, you have to pay Bloomberg and then pay the exchange. You got to pay both. Yeah, he's got it made. That's why he's a billionaire.
Yep.
This is looking pretty good actually right now. So we spiked at 1010. We're at 1976. We spiked down to 1967, but it looks like it's not going to be able to handle that lower price. It looks like it wants to, rattle around 1970, 1975 again, which is pretty cool. It's really showing, we accelerated yesterday price-wise, big time. It took out the S&Ps, took out its swing point. The NASDAQ Composite took out its swing point, both with volume. It looks like you want to build a little cause here for a higher price, and the oil market just might do it. So let's try to bring up some contracts in oil and see where we stand here. Okay, so
we're trading at 33.90.
Yeah.
Almost 34.
Right.
You had pulled up the daily spreads in here prior. So let's call it, we're trading at like almost 34. So you have one where 34 would be the exact upper end of the spread, the $3 spread. You have one that's going to be the exact bottom edge of the spread, and you have one that it's actually square right in the middle. So they're kind of set up perfectly in terms of getting to choose exactly where you want to be, where you can pay a lot of premium, be on the bottom side. You can absorb a lot of premium with a high, level of risk, low reward.
What would be a 32.50? So
this is almost going to be a 50-50.
Oh, I don't like those
trade.
ones. Yeah.
And you'd be going long, right? Is that
I'd be going long. Yeah, for a bounce.
Just to display it. So pretty close, and that's I knew it was going to be there, and that's where you get familiar with these because it's 34 is the square middle.
Okay.
So you basically just have a trade where you have a capped upside and a capped downside.
Right.
And you're getting it almost at the middle of the market.
Yeah.
And the fact that it's barely below 34 is what leads to this small discrepancy of a
right.
And this is actually almost an even better one where, for all intents and purposes, with the volatility we're seeing, it's almost right in the middle.
Yes.
And meanwhile, you're able to get a small. Your max loss is slightly less than your max reward, which is nice there. But it's because you're 20 cents off the middle of that spread.
And what if we go? Let's go into the 8 to 2:30 and see what we have there. That was the daily to 4:30. I mean to 2:30, but that was a. So if I go,
I think that's what we were looking at.
Okay. Let's go to the daily.
So we were in the 300 point ones.
Okay.
I think the dailies are 500.
Yeah, they are. $5.
Dollars.
Yeah. So 33. Look at this, huh?
So this is a $5 spread.
Yeah.
Which way we're looking for a buy? Yeah, this is going to be the other way.
Right. 33.72.
So we're almost square the middle again, is what's happening.
Right.
Because we're now at 33.70. You have 280 to the upside,
Now let's
And
go
220 the
here.
downside,
Let me
yeah.
just. I want to pull up USO just for 1 second here, because what you'd be looking. What I'm looking for, folks, is this. I'd be looking for a retest. We know we got a spike down, and we know we get volume on the spike down. See, I mean, that's this is we're in the same bar. So I'm looking for a retest of that. Now the positive thing here is that, when you go down or up and you don't break a swing point, that's kind of showing it's, in this case, going down, and it can't break the swing. This lowest swing is 889. It's like that's showing it's actually kind of positive. There's a divergence there.
Yeah.
You know what I mean?
Yeah.
It should have broke it. So if we go back over to, let's go back over here. Let's go into, what would a 34 cost? How much premium are you paying? Like $0.50?
You can see the bid in the offer right here.
Yeah.
So you're paying 30 cents.
30 cents plus another, because it's only trading at 33.70, so I'm
Right.
paying about $0.50. Yeah, right? Because you have to take what they're at right now, right?
Yeah, that would be the amount of premium. And
Yeah.
You're still only risking the 30 though.
Look at that. Oh, buy me a couple of those. No, we're gonna. Here, we can
We'll
wait
go
to come
over
back.
after the break.
No, I like.
Here's the reason why. You're paying for a $5 spread. Let's go see what the one that's 34 to 37.
Okay, cool. Tommy and I come right back, folks. You stay right there.
Has the current market volatility continued to stop
be a
you on
penny
the
or two
trades when
left.
the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We have the Dow down 93, Nasdaq's off 19, S&P's now down 10, and we're going over this gold, this oil contract. So if we take a look at this, let's go through these two different spreads, because you were just showing me something that's really cool.
So first, this is where oil is at. It's just under 34, let's call it. This is the spread that we pulled up where you would be looking for a pop. You have from 34 to 37. You don't start getting anything back until 34. So you'd be paying right now, let's call it $28 of
That's
risk.
right.
Because you're at 34.28 up to, and you'd be a max profit of like $270. That's if it expires at 37.
Right.
So the part about that, go ahead.
Go ahead.
Yeah,
no, and it's trading now at 33.69.
Right. And so that's you're paying 34.27, and of that you're paying the 27. But also, it's there's 35 cents below the market that before it even gets to the bottom of that.
Exactly.
So what's interesting is that you're literally buying it at 34.30 almost.
Right.
Which is, and that's why I pointed out. Your break even is if it goes all the way back up here. That's all
I'm expecting.
That's a big move for a break even, right?
That's right.
So what did we do? We said, well, you could pull up a different spread. Now this one goes from 32.50 to 35.50.
Yeah.
So it's still $3. It's still 300 total.
The difference is I'm in the money.
34 is the middle of this spread.
Let's buy 5 of them.
Okay. So we can see.
Go ahead.
Your max loss is 127.
So at this point, I'm risking 750, but I'm really just trading this. That's what I'm doing here. Do you know what I'm saying?
Yeah, and what's nice, and let's just see if you're in here. Okay. So
I got
to
6
pull it back up.
Is that 5 or 6?
Yeah, you do have 6. We added an extra one there for you.
That's all right.
I'm with
That's
your
good.
position.
It's more
Perfect.
money. It's a beautiful thing. Okay, cool.
Too funny.
This is a good move, man.
So the middle,
particularly because I want to trade them.
Right. And so here's what's important to look at is that the indicative index, the crude oil futures, is trading at 33.71.
Right.
Right now you get in at 33.79. You're paying 8 cents in premium, as opposed to the other spread we had up, where you were paying 34.30.
Right.
And that's now there's obviously massive risk reward implications there that go with it, but that's a lot of premium when you get a complete reversal of a move and you just get up here through the end of the day and you break even.
Right. So now let's do this. Now let's turn around and take 3 contracts. I want you to put a sellout on 3.
Sure.
At like 404. So I can get 3404. Okay. So if there's a spike intraday, as
now that's only 20 cents from where we're trading. 3404.
Yeah.
Okay.
Yeah. But that's still, for half the contracts, that reduces my principal by a big amount.
Yes, it does.
Do you know what I'm saying? I kind of like doing that all the time.
Okay, so we have a sell order.
Yep.
3 of them. 3404.
Make it 3414.
14.
Yeah.
Okay.
Good. And I'll just leave that there. If I get a pop intraday, that's great.
And it's nice, you're getting used to the platform. We talk about it. Here's your open positions, right? You have 6 contracts. This is what you got in it. This is your current market. It popped since we got in, so it's a couple pennies over.
Yep.
And here are your working orders. You have 3 of them. Trying to sell 3 at the price. Good till cancel.
Exactly.
It's easy, for sure.
Let's go to John in New York. Hey, John, what's going on?
Hey, Tom. How are you?
I'm doing great. How you been, man?
Good. I met you at the show, remember?
I know. It was great to see you again, man.
I have a question on what is positive divergences? It occurred in the SPYs, if you look at them, on February 10th and 11th.
Okay.
That's supposed to be a sign of a bottom.
February 10th. A positive divergence. So you're asking me what that definition would be?
Yeah. How do you figure that out? It's a technical term, right?
It depends who uses that term and what their definition of it is. You know what I mean?
Mm-hmm.
To me, that wouldn't have been a divergence because this would do exactly what, like in the out of time in the trade, this tested a low, had lighter volume, and rejected price. A divergence is that it does something other than you think what it's supposed to do.
Yeah, or differing.
Yeah. But that doesn't mean that someone hasn't used it, but they use it in a different way. You know what I'm saying?
Right.
Like when I first coined that term, quality volume, which was I try to get a trademark on the term, and I had to go back and forth, and I didn't get the trademark. I was going back and forth with the trade association so much because they said, hey, you can't use the word quality. And I was trying to explain to them. I said, well, but in the conversation on the phone was that well, everything goes up in quality. I says, no, but something could go down in quality. And we had a half-hour conversation. He said, what do you mean it can go down in quality? I says, that's where it wants to go, but I still didn't get the trademark. Yeah. Because, so...
It can just be used at different...
They said it was a generic term,
right,
you know what I mean?
Right.
That, so, in that case, about the positive divergence, John, it would be who used it that you'd have to ask, really. Do you know what I mean? If they thought that was a positive divergence. Divergence to what? You know what I'm saying?
Right.
Yeah.
Well, market internals, he says. It's Bob Brinker.
Okay. So, let's see. Market internals, positive divergence. Okay, so what that would be, I suspect what that would be is this, is that we were hitting lows, and the positive divergence would be that as we were hitting lows, there were many other stocks in the S&P 500 that were actually not hitting lows or coming off that. And I'm just speculating, but do you know what I mean? That would be positive divergence, okay? Because that would be saying that there's a lot of stocks in the S&P 500 that were not hitting lows, that were going higher, and that was probably happening at that point.
It could mean a lot of things. Just as you're just trying to decipher like his term. If that's what I just don't, it could be because I agree it's a general term, just like a lot of your general terms. If somebody tried to interpret, in that same way, or quality volume,
right.
they might not.
Well, inside the book, the definitions are actually there.
Of course, that's why I think you should probably try and figure out how to ask him.
That's what does it mean?
Instead of us just guessing, you know. That would be the play, John.
Okay, thanks.
Okay, man. Have a great one. Have a safe one. Let's go over and take a look. Let's see where that USO is, so I can get a gauge on. Oh, that's good. Okay, so watch. What the USO did is that we got down to 894. It didn't break the swing. This is positive. The volume, the risk is going to be that you can go back down and test it. But if this USO gets back inside, it only needs it needs 4 more pennies, which is a lot for the USO, by the way.
Yeah, I was going to say, I'm guessing we got a nice little turnaround in oil for sure.
Yeah. So that's, so man, I'm glad you had me buy this other contract, man. Well, look at the difference. It's only $66, but it's $66, man.
Yeah,
do you know what I mean?
As opposed to it'd be like, it'd be 56 anyway, just so.
Oh no, I'm talking about this contract in particular versus the other one I was looking at with all that premium.
Okay, yeah.
Because that wouldn't have moved like that.
Yeah, I mean that's just.
And particularly because it's a trade for me. Do you know what I mean? This is not,
And if you're trading a spread that goes from 34 to 37, and you're buying it completely out of the money, under it, you're going to be paying premium for the opportunity to make a profit all the way from 34 to 37. So basically, you better be paying that premium, anticipating you might reap the rewards of that. And if you're not going to reap the rewards for 37, then be careful paying the premium for that option.
Big time.
Yeah,
big time. And don't forget, folks, noon today, you got JJ and Kevin Hinks are going to be out there growling and prowling with their swim lessons. So you stay tuned at noon. Tommy and I are coming right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. We appreciate you growling and prowling with us out here. So let's go bring that back, because I think one of these three contracts probably should move out. It's getting pretty close here. So we had oil,
it's really close to market. What's going on?
There that's me on the other side. So so we just sold three. So that's a beautiful. So we sold half of them. That brings down my risk value on the full trade,
yes,
but it brings it down
sure. And you got in at $33.75, you got out at $34.14.
Right.
That's $39 per contract. So you just basically locked in $120 of profit,
right?
No matter what, right off the top, and that's nice. Yeah.
So now I'm risking $250 on this trade. I have $250.
Yeah, we're having the conversation during the break. Your position value right now is $530.
Right.
So
I'm risking that.
So you're risking that. Right. Somehow, your investment, your total risk for this trade now from the beginning of the point is $250.
Right.
But you have a lot of built-in profits that you're letting ride with that 250 number, as opposed to, because that's factoring in, and you can see it, that's over $300 in profits that are still on the table.
That's right. No doubt.
There was only 120 taken off the table, and that's why this was like a $700 trade potentially.
Right.
So that's where you get the 120 profit plus the 560 positional value.
Right.
There you go.
Right.
But
that's how I like to trade, though. Do you know what I mean? Because
It's just when you say, I'm taking half of it off the table was kind of your statement as we went into it, and the position's a lot bigger than.
That's right.
All.
No doubt. So now, okay, you still want to manage this. So if I look at this, let me just look at this. I got to just pull this back up for a second so I can see. This oil market's twisted, isn't it, man?
That was quite a spike down, spike up.
Seriously, man. So watch this now. This gets interesting, because it's like, okay, are you only going to test the highs and then give it up? I might just sell the rest of it there.
Yeah.
It's like, and what the difference is, folks, and this is what's so cool about the aspect of whether it's oil or gold, because they move so quickly like that, inside if you traded one futures contract, right, that's $3,800. Now, we didn't even buy a futures contract. We bought 6. 10 would be a futures contract, okay? But I think we only put up $780, right? Was
for the total contract?
Yeah.
Yes. Yeah.
Okay, so we would have put up maybe $1,000, right?
Yeah.
So that'd be a little over 1,000, right? 400 plus 7. It would be $1,185 versus $3,850.
Okay. You were just going so quick.
Well, it was $125 a contract, right? That's what we put up.
Yes.
Yeah. So it's $1,250. $1,250.
Okay.
10
You're
contracts.
jumping around so quick.
Well, 10 contracts.
It's all right.
10 Nadex contracts is one full contract when you're trading in the futures. So 10 times 125 is $1,250 versus $3,850.
Sure. Yes.
Which is pretty cool.
Right. I'm with you. Okay. Yeah.
And the we're going to get it too. Look at this. Is interesting, man. What is this doing to the market? You got to love it. And folks, if you haven't test drove that Nadex platform, get over to our website at TFNN, bring it up, and do not trade with real money first. That's the bottom line. You want to see how these contracts trade, but if you're trading the defined risk contracts, and there's nothing like defined risk when you're trading in general. It seems to me that the gold and the oil contracts are really like moving like.
Yeah, I mean, especially around the news event.
Yeah.
I mean, that's quite a move, going from $34.40 down 80 cents.
Yeah.
And now up $1.
And my top side is $35.50.
Yes, that's the upper end of the spread. So what's going to happen is this isn't going to move as quickly as we get towards the end of that. As we can see, it's trading at 34.60, 62, and you could get out at 34.50 right now.
Man, I can't believe that was a quick hour. You stay right there, folks. Our man, Mr. Basil Chapman's coming up next. Swim lessons, TD Ameritrade, Steve Rhodes, Dave White. Thanks, pal.
Thanks, man.
Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.